Welcome to Momentum Monday, Howard.
Last week you were dancing and the to our music and the thing wasn't up.
Yes, I know I made a mistake, but that's fine.
No, it showed you'd love our theme song. I can't believe you let that air. That was pretty funny. I'm in New York. Just landed, everybody. It is Monday. I did 2 days of yoga in a row with my wife. Let me just tell you,
I can tell you.
I can't sit straight, but I feel good. This yoga thing, I think these Eastern people are onto something.
Mm-hmm.
That's it. That's all I get is Ivan, I got a note.
What are you selling?
I don't know. I wish I had put that up about 6 weeks ago. So Blood Red Monday. You're in San Diego or Venice? Where are you today?
Somewhere in the middle.
Okay, so you're in San Diego. We're going to keep it short because there's not much people should be doing except building some lists and staying out of the way of this rogue way of the market. The markets are angry, buddy. Let's go right to it and let's see what you see.
All right, let me share my screen.
And go ahead. And this is the NASDAQ 100.
Yeah, I mean, they let NASDAQ 100 led the sell-off today, down 3%. Most of the FANGs are in a bear market. I think in general, the stock market, if measured by Russell 2000 or the S&P 500,
stocks on their own aren't in bear markets. They have earnings and they trade, but yeah, the indexes look to be headed towards a bear market. And can we see the screen, or am I looking at me? Let's just make sure.
I think people are only seeing my screen.
I'm gonna have to do this show over again. We've only been doing this like 9 years and can't get it right. So this is the S&P 500, which is well above the lows of last month here, Ivan.
Yeah, I mean, there are some stocks that are not making new lows, but in general, they're down 30, 40, 50% from their 52-week highs. For example, biotech, they made new lows last week.
Yeah, I would say that Amgen's the only one of the big caps holding up. So I'm out of it, but it hasn't keeled over yet.
Defensive stocks are holding the S&P 500. But, I mean, that's why the S&P doesn't look as bad as Russell 2000
yeah, Johnson & Johnson, McDonald's, Starbucks, Verizon. Stocks, utilities have come back, even though rates have risen. So money's hiding out. It's not completely coming out. God forbid there's a real panic right now. Right now, it's just a panic in FANG, crypto, anything semiconductors, China. So it is a big. It's big and ugly, but a lot of capital is hiding out. And if that seeks, if they start hitting the bid on the indexes, whew, you will get the beginnings of an end of at least a short-term washout. So right now markets, people are comfortable hiding big assets out in these defensive names. But let's go back to that NASDAQ 100.
Yeah, just real quick before that, I think one of the signs of a real washout and a real forced liquidation would be if even the utilities and staples sell off with the rest of the market. Then you would know that people just want out at any price, and they're just selling because they have to, not because they want to.
Yeah, the utilities kind of were selling off last year, I think, as interest rates started to rise. If we go back and look at their bear market, just quickly, if you look at a weekly.
Yeah, this is weekly.
Yeah, you can see in 17 it had a nasty, for utilities at least, that was a nasty correction. So that's money's hiding out there. Okay, so let's go back to NASDAQ 100. You can just see on a daily below the 200-day. right now there's just a buyer's strike. Like if you look at Facebook, you know, tonight, if you look at Facebook, I mean, whew, the markets are angry. And I think if you go to Tech Meme, I haven't opened up Tech Meme. This will give you a flavor of how the geeks are thinking. And if we look at the homepage of Tech Meme, sentiment right now is off with their heads. Apple's reduced production. You can see, I'm surprised Apple made the top of this page, but you can see second story face. You know, Washington Post is out with an unflattering forehead shot of Mark Zuckerberg and saying, give up the role. I mean, it's a joke. I mean, he has full power. He has more power than the president. The only way people can vote is by selling stock, and that they are doing. So if we look at sentiment, you can see the only way you can't get rid of Zuckerberg, not going to happen, and so people really are voting, and this is more people than turned up to the midterms. This is a real sentiment thing because Zuckerberg ain't going, so the only thing people can do is vote by getting rid of the app, which a lot of millennials are doing on Facebook. But Instagram is more powerful, it seems, than ever. And this is why I'm not going to panic right now, is we're going to have to live with Zuckerberg. And until there's a replacement to Instagram, cooler heads are going to prevail here at some level with the stock. What do you see, Ivan?
The stock is in a downtrend.
No, I'm just saying, obviously the stock's in a downtrend.
In a long-term perspective, that pullback will be a great buying opportunity. I mean, Facebook and its products are not going anywhere anytime.
We're back into the March 2017 price point, and I mean, I think deservedly so, based on Facebook growth. But I look at them like a tobacco company, without the lawsuit so far. So Facebook causes social cancer. This will be, in a year or two, this will look like, I think, a blip. But again, there is no guarantees in the stock market. It's remaining on my 8 to 80 list for the reasons of Instagram and WhatsApp. Not so much about Facebook. And I'll be honest with you, my wife, Ellen, she doesn't complain about Facebook. She uses it every day. She's got a clean network that she started late. She started probably in 2014, 2015 using it. So she doesn't have the headaches that the early adopters had. She just likes it. So we're getting close to some kind of event. And it could be the utilities and defensive stocks in the next week just giving up the ghost, Ivan, and we get some kind of a event panic. And I think what you'll see then is a lot of these stocks, while the rest of the market sells off, I think a lot of these stocks will start firming back up. But, it could be 20% lower for all I know.
Oh, easily. I mean, I think today, finally, we started to see some...
yeah. So here's HubSpot. So let's get right to it, Ivan, on the enterprise. If we zip around, HubSpot, this is marketing automation, gave up the day. Where's Work? Let's look at Workday.
Many of the enterprise software stocks were holding relatively well up until today. And today we saw a pretty significant flush. I mean, many of them are down 7, 10, 15%.
But even still up on the year. So again, we got to keep this in context. If this is the beginning of a bear market, these stocks can see 40, 50% wipeouts over the course of a year or two. So,
even sooner. I mean, look at NVIDIA and Grubhub. They're down 50% in a few weeks, not in a year. Yeah,
pull up a weekly of NVIDIA. I was going to get to that eventually. I think this is really the poster child for the bubble that we saw in Bitcoin, and we can safely now, it smelled like a bubble, it felt like a bubble, and we know now was a bubble in crypto. The NVIDIA was the poor man's and the institutional way to own that trend. Now, they can deny it, and the institutional will deny it, 1,000 times over, great earnings, blah, blah, blah. But any stock that can be wiped out 50% in about a month and a half, this was the panic. This is where people, the fake believers or the even some true believers in crypto and the never-ending bull market in gaming are just caught. Relative strength. That is one of the fastest moves to a 6 relative strength from 90s that I've ever seen. There were warning signs. The stock it was trading between 180 and 220 the last couple of weeks, and then so there was a chance for people to get out, and now quickly 144. Whew. That is pain. That is going to cost some people their jobs.
Yeah, I mean, and NVIDIA is not the only one. That's why I like to say that momentum stocks are the best trading vehicles, not only in bull markets, but also during corrections, just because they tend to drop 4 to 5 times faster than the general market. And if you're a nimble trader, they provide some really good opportunities on the short side. And
Grubhub was a bearish favorite at 40. It's still, even after today, a double after falling almost 50% to 80. So timing this stuff is terribly hard. Grubhub's in a competitive space, great company, but now you can see the market forces combined with the, well, it's mostly market force. The company seems to be doing fine, but
sentiment, yes, nothing in their story has changed. They continue to grow, but just sentiment changed. And the only thing that matters in short-term perspective for prices is sentiment. And currently, sentiment is very sour, and many stocks are in a negative feedback loop where just lower prices lead to even worse sentiment. And then,
nasty. I'm trying to think where's Netflix back is just, I don't know where the buy point is on something like this. It's in my 8 to 80 list, but again, still up on the year. You got to give these, these stocks can fall 40 to 60%. And I don't want to be a hero in this tape right now.
I keep getting emails from people asking me, where should we buy this in that stock?
Yeah.
And I usually reply that in this market, you should be looking the Nasdaq 100 because correlations are so high that there's no way an individual stock will bounce without the Nasdaq 100 bouncing. Like if they bounce, they bounce together.
Yeah. No. That's why in sell-offs, I'll trade the indexes, not the stocks, unless we're in an extreme scenario. So yeah. So I don't want to get into the strength. We've talked about the last 3-4 weeks. Johnson & Johnson, Starbucks, McDonald's. They've held up. Disney. They've held up rather well. So I don't want to jinx them further this week. But okay, let's take. You obviously have Tesla up here. Pretty interesting.
Yeah, pretty interesting. That definitely showing a little bit of relative strength, but it's not going to stay.
Go in a weekly.
With the market being so weak, but definitely very, very interesting considering how large the short interest is. And it's even more interesting to look at the Chinese Tesla NIO, which they try to break out. I mean, curiously.
So that's the NIO is the ticker symbol?
Yes, it's the Chinese Tesla.
Do they have their own Elon Musk? What's the guy's name that runs that?
I have no idea. I like the price action. I mean, full disclosure, I own that stock and already sold half of my position, and we own it for subscribers as well. So
you own it for subscribers? All right. Oh, I think it's Elon Musk. They can't pronounce the L. Is that what the joke is, Ivan?
I've never heard of that, but yeah, it's a good one.
Okay, good one. I can see you're torn up about it. Okay, let's go to the SL50.
Yeah, let's take a look at the list. I mean, it's a bloodbath today. I mean, it's full of momentum stocks, and most of them are down today significantly. A lot of red. Even stocks that reacted favorably, that received a favorable market reaction to their earnings.
Yeah, I mean, Twilio surprised me. I mean, I did when I was covering it on stocks tonight, and I sold some in the 90s, even though it just went against everything that the stock was breaking out. Gapped up into the 90s. I sold a little bit myself, shared that, and it just goes to show you that you just have to be consistent. You can't. Stocks are just stocks. You have to have a consistent practice around buying and selling, companies, and it's now given back everything from that gap pretty much. Again, I still think one of the strongest companies and platforms and leaderships and industry, leaders. But and I think this is what will happen eventually to defensive and utility stock share if we continue to sell off this week and next, is they will do the same thing. But there's very few safe havens. Okay, go back to the list, Ab.
Yeah, I mean, if a stock like Apple can sell off 20-30% quickly, then no stock is immune.
Yeah, Zebra is one of my favorite stocks, and down 10% in the last few days. So yeah, Shopify made the list, was down 10% today, 11%.
Came back and it's a new stock on the list, and there were quite a few stocks that were kind of holding well and looking relatively well.
Shopify was looking great last week. Zebra was looking phenomenal. Twilio
coming into this week, and then today there were slams.
PayPal was looking fantastic. I added some to my position last week, and today got slammed. So there is no place to hide out. I think you have to really, really use a wide berth. It's just punishment. I never liked Square, and here we are. We're seeing it break down. And here's Zebra right back into its base. Was looking fantastic just a week ago. People aren't going to stop having coffee again. I look at Starbucks almost as a defensive name in this type of market, but kudos to the longs there. It's McDonald's and Starbucks. People are hiding out on coffee and fast food. Yeah, Johnson & Johnson, Procter & Gamble.
So remember last Monday, we talked about the retail sector, how there were so many retail stocks, restaurant stocks that were holding a lot better than the rest of the market. Well, 5 days later, that's not true anymore.
Which ones gave up the beat? Which ones haven't gave up the beat?
I mean, many of them pulled back. Let's take a look at Walmart. I mean, they're down 15%.
Back into its base.
15%. Quite a few of them actually. I mean, not Oat is holding relatively.
Well, it's hard to kill the Kardashians. Chipotle's had nothing but PR scandal after PR scandal. Obviously, XRT's down. Amazon's probably a huge percentage of that. Let's take.
Yeah, let's go back to Amazon real quick.
Lulu's interesting to me. Lulu in the 90s is interesting to me, actually.
Lulu's not looking good here, but they report earnings. Usually in the next couple of weeks, we'll see many retailers report. Yeah. And Lulu lost 130 today. It was important to hold that level. I think now it's.
But I mean, some of these that hit their 200-day, a panic, and it's like 110, 120. These things, for traders, this is one that. But again, with earnings, who knows? The stock is not cheap, but still one of my favorite 8 to 80 brands. But you can see here, I mean, people sure wish they had taken some off the table when it had doubled up to 150. It's just, one of those things that the markets giveth and taketh away here. There's Lulu on a weekly. Yeah, I think, if
it goes to 120, there will be a good trading opportunity just for a quick 20 points bounce.
Possibly. But again, with earnings coming out, anything can happen, and this is not a cheap stock. So you got to give it you got to give the sellers their due here. Seasonally, the only thing going for the bulls is seasonal, and I wrote last week that that's not enough for me. I mean, everything seems to be breaking down in the direction of the trend. Even Bitcoin. Look, if you look at Bitcoin, which is obviously the most spectacle. The most speculative. I mean, we have truly gone and wiped out. We go back to it's over. Now, Bitcoin will survive or not survive. I'm not going to comment on that. Can we pull that up, Ivan? They don't have. You just got an ad over it. Okay, so there is no support anymore. And that jihad last year from 2,000 to 18,000. You basically have your support. 1,800 to 2,000 are where at some point the miners are all going to get washed out. But this is really fascinating. A breakdown. There were so many people leaning against that $6,000 price for about 7-8 months, and there's just no buyers. I haven't seen anything like this. It's really incredible. Really an incredible case study in greed and silliness, digital silliness.
What's very interesting to me is that, like, when I open my stock tweets app, I keep seeing all the cryptocurrencies trending, which is very surprising. That means that people are still very interested, and you don't see that near the bottom of any asset.
Oh, I remember seeing it with Harmony and MoviePal. I've seen it 1,000 times on StockTwits, like you have, and sentiment is still too, I wouldn't say curious, but people are still just don't know.
Much interest. Like, I mean, there's still too much interest in cryptocurrencies. I think
relative to how important it really is in terms of in terms of it's just not being widely without apps and without true use cases. It's back to the drawing board. People need to be wiped out. And I think this is the poster child for 2018. And I think Facebook, the two charts that matter right now are Bitcoin and Facebook, because, like I said, Zuckerberg ain't going anywhere. He's been through this before, and that's why the share system is set up the way it is. So, when Facebook bottoms, it will be with the shareholder base that knows that whether Cheryl is there or not, I'm not sure. But much like, it's Facebook and Bitcoin. Bitcoin's the distributed Facebook, but just doesn't have the Facebook-like app yet. People are just trading against each other, And then there's Facebook, which is the poster child for the social web, and it's imploding. So it's a really interesting thing. And then you have NVIDIA, which was supposed to be, bulletproof with gaming, crypto, and their platform chips, and stocks down 50% in, I don't know, 3 months, Ivan?
Yeah, about even less than that. Yeah.
Okay, and we're going to pull up Twitter here. Yeah, it's holding well, but again, poor management. It's holding up better than Facebook. Obviously, it's had a better year than Facebook, as it should have. I mean, they got the president of the United States farting away on this thing all day, but haven't been able to make much out of this. But I think if the market turns, Twitter relatively may do better than Facebook in this next phase.
Yeah, anything's possible. I mean, I don't want to speculate on it. When we see a turn, we'll see which stocks.
And where are you, Ivan, in terms of you're mostly cash?
Yes, I continue to be mostly in cash. I own a little bit of that Chinese Tesla Neo for a trade, and I mostly dabble intraday. And what I noticed that most of my gains are coming on shorts.
On shorts. Okay.
So in this environment, it's been a lot easier to make money on the short side. But then everything I do, it's mostly on intraday basis, because the market can gap up or down 2 or 3% on any given day. So in this environment.
And what about the shortened week? You think the market can bottom in this type of week, or are you still
coming into this week? Actually, I kind of had a bullish bias, but then when I saw the sell-off this morning, I was like, I don't really see how I can be bullish in this environment, even though.
And people are going to be traveling. If there is a time to pull if the sellers really wanted to, they will press their bets this week. So, and I'm on the road. There's a lot of people on the road this week. So, So it could be a wild week. I think people that are a little nervous may see this week get a lot worse. What was I going to ask you? The other thing I was going to mention to you was, oh yeah, the enterprise stocks. I just want to rip through some of them just to show people. So I haven't showed HubSpot. This is the leader in marketing automation. Let's whip through the 4 leaders. Where's Okta got wiped out today, which I'm long. CRM. Yeah, Zendesk. Wow, broke 50. I think, these are stocks. If you see Zendesk in the 30s, this is why I'm starting to get actually excited. So if we go back to Zendesk, that's still the leader. So if that stock has another couple horrific days, yeah, man, I mean, these companies will get bought at some point. So it's all, and if I look at Atlassian team,
which one?
I guess enterprise went from like the darlings to the team, Atlassian, the TEAM.
Oh, sorry.
It closed below 70. Yeah, this was just $100 stock. So again, in the 50s, some of another 10-15% on some of these. I know that you've got to have your list together, and some of these companies are not cheap, but they're the leaders, and they're going to be down. They're 30 to 40% down already from their highs. Okay, so enterprise, while broken, is starting to look a little bit interesting, and I'll leave it for there. Hope everybody has a good week. Ivan, have a good week.
You too, Howard. See you next Monday.
Okay.